Good afternoon. So my name is Peter Scott. As Keith mentioned, I look after strategic partners and OEM sales. I'm the incubator for all new partners that we onboard. And as Keith mentioned, we're not in the habit of signing up paper partnerships, and I'll take you through the process that we take every partner through before we take them out of incubation and build a team around them. So I've been with the company on my 10th year. And for much of that time, I was in sales leadership. I led the sales team through the IPO in 2012. And in early 2015, when we decided to make the pivot as a business from one that was very much direct, 100% direct, to one that's now leading towards being very indirect, I assumed the responsibility to build out that channel. So we talk a lot about modeling our business based on channels and not salespeople. And the definition for us of a strategic partner is one whereby the sellers of our partners can be compensated. They can retire quota for selling our product. So they think of our product in the same light that they think of their own products. And this is the process. These are the things that we think about. These are the things that build these partnerships, that take them to something that's strategic. Product alignment is very much key to and central to all of that. Without product alignment, we can't go much further. And I think what we've realized is building out this channel, much of our time, much of my time, and certainly the channel managers that we bring on board, is very much spent around enabling these channels. It's an ongoing process, especially when we're working with and have access to thousands of sellers globally. So let's just drill down into IBM and get right to the meat of it. It's obviously the best example that we have to date, and I want to show you how that partnership has taken shape over the past 12 months. So the first point to note is that IBM, and in fact none of our partnerships, have any exclusivity attached to them whatsoever. Now, in the case of IBM, we've got access to almost 5,000 sellers. What I mean by that is 5,000 sellers are fully compensated on selling our product. It's an OEM white label, so to many IBM sellers, they think it's just another IBM product. The fact that it's WANdisco Fusion under the covers is irrelevant to them, and so they retire quota in the same way that they would were they selling a product that was manufactured by IBM. So we launched that partnership in summer of last year, and within the first 2 quarters, we'd signed a number of very strategic transactions. One of those we announced I think at the end of December. That was with a very large automotive company, one of the largest in the world, and the royalty of that transaction alone to WANdisco was $1 million. We then went on the following quarter, Q1 of this year, and we eclipsed the largest ever deal that we'd been able to do as a direct organization. And as the slides point out, the value of that deal to us from a royalty perspective was $3.5 million. So one of the things that attracted us to IBM as a channel was they're clearly very, very competent when it comes to doing large, multi-million, multi-$100 million transactions. And I think what we see certainly moving forward into the fourth quarter and into the first half of next year is we see a significant pipeline of opportunities. These are very much marquee brand names. And what's interesting about those opportunities is we've already demonstrated that our product standalone can generate significant dollars. But what's interesting when you look at the bigger picture and the size of the overall transactions that IBM is doing, it's the pull-through that our product's generating as a result of that. So it's the other IBM products that we pull through. It's the other IBM products and services that we're able to drive consumption to as a result of our technology. So, of course, there's a process around this, and Keith referred to me as this incubation, and generally I take all of these partners through a process of validation to the point where we've actually demonstrated success. We have something that we feel is repeatable, and then and only then, at that point, do we build a team around that to manage that day to day. So really what this slide depicts is it's many of the channels that you've seen us already launched to date, but it also covers a number of other partners that we're in varying different stages with, but we believe could be equally advantageous given the value proposition and the use cases that we're able to address. So, I mentioned earlier, at the stage one, which is really initiation, it's really all about the product, right? We have to ensure that there's a strong product alignment, and that means our products align very well with our partners' products, and it's addressing requirements that they're hearing from their customers. Now, once we've addressed that part and we start to focus on forming the joint value proposition and ensuring that's understood, then really what we're focused on is enabling the field. And that's where 70-80% of our time is spent. It's spent ensuring that both sellers and the technical sellers are well versed, they understand the technology, they understand the position and the use cases, they are competent in having intelligent conversations with the customer about the value and the benefits that this technology can drive. And I think Nick will give you some very specific examples of the types of business cases that we've been successful in building for IBM customers to demonstrate the value of the product and the investment that they're making. Now, as we move into stage 3, we've got a joint solution, and in many cases we've got joint customers. We've got something that now is repeatable. We've established joint marketing, we've established joint go-to-market strategies, and again, this enablement process, we're constantly educating the field. But at this stage, we typically have a number of champions, people that quite easily could sit within our organization that are really capable of going out there and doing all of the things that I just mentioned. And then what we do in order to scale that expertise across the organization is we take a train-the-trainer approach, which at this stage is working very well for us. Now, stage 4, which I refer to as really maturity and success in customer acquisition, that's what drives maturity. That's the point when we start to build a team around this. We've established joint sales, we've got joint marketing plans. In many cases, we've got access to marketing funds and go-to-marketing funds from our partners. And in all of the strategic partners that we refer to, we've got dedicated partner management. In many cases, those people, they manage a handful of partners. So we get a lot of exposure, we get a lot of their attention because both of us believe the partnership is strategic. So let me just give you a quick status on the partners that we very much do refer to as being strategic. So clearly IBM, OEM for us, that's our preferred model. That's where we believe many of our partners will move to as they start to become more aware and understand the economics that OEM can drive. But IBM has demonstrated, and we've announced a number of these wins, is clearly generating significant dollars for us. We've reported several $1 million through single transactions alone. And there's many other opportunities that we've closed jointly successfully that we haven't announced. But we've got, just to give you an idea of the reach, we've got several thousand salespeople that we've got access to, up to 4,000 sellers globally. Now, as an organization, our focus has to be in the primary markets. And so to date, we've focused really primarily on North America, and we've focused on Europe. But there's many other markets, and if you look at how IBM look at revenue per market, it's probably 30%, 33% across each of their 3 markets, and it's pretty evenly distributed. So some of these emerging markets, Japan, India, Latin America, it's really been opportunistic at this stage. We've waited for opportunities to come to us, and so as we take this partnership to the next stage, we will more than likely take the same model that's working very effectively for us in North America and Europe, and we'll extend that model out to some of these emerging markets. So if we move down into AWS, from a pure public cloud standpoint, AWS was obviously where we focused all of our efforts early on, just given the sheer size and scale of the organization. And I'm pleased to say at this stage, and we've made, again, many recent announcements that, we have very tight platform integration. We're leveraging a lot of the capabilities within AWS's infrastructure. And that's important for customers, referring back to what Keith mentioned earlier on about, the simplicity that customers expect when moving to the cloud, the speed at which they're able to spin up technologies and spin them down. And, we made some announcements over the last couple of weeks about the first true hybrid data lake. And essentially that gives customers the opportunities at the touch of a button to start leveraging data that's residing on-prem and to leverage that data in the cloud and to to leverage products and technologies that reside within AWS that would have been cost prohibitive otherwise. And with AWS, what we've found to be very important to us is they have a significant ecosystem of partners around it. And what's key, if you look at the revenues across the cloud market space, is a lot of what's driving that revenue today is system integrator and consultant partners. And these are not necessarily, the global system integrators that we all know of. In many cases, these are quite small, boutique, and regional consulting partners that have domain experience in our space that may be exclusively to Amazon, that as a company were born out of the cloud. And so we've seen a lot of success over the course of this year in recruiting those partners, not as a partner that can resell or OEM our technology, but a partner that's in there at the beginning, that's in there architecting these platforms and is able to recommend and pull our technology in as appropriate. Now with Microsoft, the same applies. We made recent announcements. Last week, we made announcements again today. The product alignment is certainly there, and I'm pleased to say that we've secured our first customers. And the announcement that we made today, and I think you're going to see a trend of that over the coming months, around how do you combine our technology with some of the appliances that are meant for bulk data transfer so that you can reduce the costs associated with moving data across the network. And today we announced that integration with Databox, which means customers now truly can do live migrations. They can migrate data at petabyte and exabyte scale without any downtime or disruption whatsoever. And then finally, Oracle. So we announced something called Maximum Availability Architecture with Oracle 3 or 4 months ago, which is essentially the highest accreditation that you can get across Oracle products as they relate to disaster recovery and high availability. And in many cases, Oracle have their own products to address that problem within their suite of products. Golden Gate would be an example of that they use across a number of their products. But for this next generation of platforms where we're talking about petabyte scale and we're talking about large unstructured data, these technologies don't address those use cases, whether they reside on-premise or in cloud. And so in that case, we were awarded Maximum Availability Architecture for Fusion as it applies to Oracle's big data appliances on-premise and in the cloud. And we're currently working on expanding that partnership and that accreditation out to other cloud-like products that Amazon are that Oracle are investing significantly in today. And I think equally what's worked very well for us at Oracle is the reach that we're getting through some of their very large strategic system integrator partners who in many cases will resell our product and do resell our product. And I think some of the announcements that we made early part of this year with large financial institutions, 7-figure transactions, these were driven by Oracle strategic partners. So a lot of announcements over the past 5 weeks. Let me just try and simplify these for you and so that everybody understands what they mean. I think Paul enumerated the hybrid cloud use case earlier on. And for me, that's the leading use case as we see organizations move to cloud. I think all of the cloud providers accept that 50% of that data is going to reside to the cloud, and Peter Burris talked a lot about the cloud moving to the data. Well, that's hybrid cloud, and in many of the opportunities and deals that we've seen, organizations are looking to adopt a hybrid cloud architecture really to achieve 3 things. They want to get out of the data center, but they've already got an investment, so they want to utilize the cloud for elasticity. Clearly, scalability is key. And thirdly, they want to access products and services that would be impossible, if not cost prohibitive, for them to buy, certainly in a timely fashion. And so with all of the cloud providers, Amazon, Microsoft, and Oracle, we've established product listings in all of their digital marketplaces, which in many cases means that sellers can now be compensated, which is another reason why we like the marketplace. But these announcements really are the first of their kind, and that's why I think it's important to understand what they really mean. I mean, essentially, we're talking about it making it very, very simple for organizations to start to make that transition to the cloud. At the click of a button, they can now start to access data that resides on-premise, and they can access that data in the cloud. And importantly, for most of these customers that want to keep a presence on-premise, it's the control factor of that. And so we put them very much in control of where and when they want to move that data. So you've seen a number of slides today about the total addressable market. This one is slightly different. So really what you're looking at here is a graph of the past 12 months across all of the major cloud providers. It's looking at market share and it's looking at growth. And you'll see from all of the companies that are on there that we've announced, and we've talked at length about partnerships with all of them, bar one. And what's really interesting for us, I think, when you look at someone like Alibaba, is whilst they might be a small percentage, 10 to 20% of AWS's revenues, they're growing at a rate that is 3 to 4 times the speed of what Amazon is growing at. And, as I said, clearly, they're not a partner today, and so that's somewhere that clearly, as an organization, we need to focus on. We've spent a lot of time in China looking at it as an emerging market for us over the past 12 months, and the pure scale of the movement of data that we see as it relates to big data and Internet of Things in China moving to the various different cloud providers, it's just at a scale that we've not seen in any of the other countries. And then finally, this slide may shock a lot of you. I'm sure it will. And in addition to all of the R&D numbers listed on this slide, Alibaba, just last week at their annual Cloud Computing Conference in Hangzhou, which attracted about 60,000 people. So again, very similar scale to what AWS drives to its annual conferences. That they pledged another 15 billion. So there's a lot of money being invested in this space. Now, give you some sense of that in the context of IBM. Of that 5.4 billion that IBM have invested over the past 12 months, the vast majority of that goes to IBM Analytics, which is clearly the high growth area and is the area in which our technology resides today. And we've seen a number of acquisitions. There was questions earlier on about change data capture type replication technologies, and there's some great examples of that, acquisitions over the past 10 years. You've got Data Mirror by IBM, you've got Golden Gate by Oracle. And the challenge with many of these technologies, and it was enumerated earlier on, but essentially they don't scale to this next generation of platforms that have been and are being built. And they reside both on-premise and cloud, and that's the opportunity presented for WANdisco. Now, if I was an investor, I'd want to know and understand just how unique and defendable this technology is, and hopefully through the presentations that you've heard today, we've demonstrated that. I want to understand what the barriers to entry are. I'd want to understand how much money was being invested. I'd want to understand what the total addressable market is and why nobody else is developing these capabilities. But in reality, and in short, the barriers to entry are significantly high. We've been doing this for 12 years, and it's all we do at WANdisco, and we do it very well. So we've got a significant lead on anyone else who's trying to enter. We've got a number of patents. We've got many, many more that are pending. And combined, those things provide us with a very deep and a very broad moat around our business. And so, back to the statement that Jigen made at the end of his presentation about not believing that enterprise data applications can scale beyond a single geographic location without WANdisco Fusion, the rapid growth of cloud and hybrid cloud only strengthens that position. Thank you.
No, I'm introducing Nick now.
Of course.